It would be, I'd be remiss to not call this a tricky moment for the market. See, the economy's slowing. Commodity prices are coming down. And many classic cyclical stocks have been struggling. All signs of the need for a rate cut. People are suddenly much more worried about a slowdown or even a recession. But on the other hand, we're also waiting eagerly for the Federal Reserve to cut interest rates and bolster the economy. The worse the data gets right now at this moment, the higher the probability that the Fed takes action. And when the Fed starts cutting rates, it's the economically sensitive cyclical stocks, which have been punished and are being punished, that win. At this point in the business cycle, where we're torn. We're torn between worrying about the economy and salivating over the prospect of lower rates. You absolutely need some cyclical exposure right here, but it pays to be selective with your picks. You know why I've been thinking about this? Because I think a lot of stocks don't fit the pattern. So why don't I do this? Let me give you 5 industrials that I think are still beating the market this year because they're no longer pure smokestack stocks. They've given investors new reason to own them, though, in a changing world. I like these, and it solves a lot of the dilemma for me about what to recommend to you right before we have to cut. First up is Cummins. We had them on very recently. This is best known as a maker of truck engines. If Cummins were still a pure play on trucks, no desire. Trouble right now. After 2+ years of freight recession, truckers aren't exactly flush with cash. In the first half of the year, sales of Class 8, that's big guys, trucks were down more than 16%. That's rather remarkable versus the same 6 months in 2023. That's why they're calling it a freight recession. But Cummins actually hit a new all-time high earlier this month because it's no longer the Cummins of old. For starters, these guys have definitely managed the energy transition, developing lower carbon solutions that work right out of the gate, like natural gas-powered engine platforms, as well as working on zero carbon stuff for the future for electric and hydrogen engines. Now, in May, Cummins held an analyst day where they walked back some of their long-term targets for the zero carbon business, while also raising the outlook for their core internal combustion business, which was more than enough to offset the damage. Now, I think that they've been smart about working on green engines without abandoning the traditional mainstays that run on gas or diesel. More importantly, Cummins has a thriving power systems business where they make generators and commercial power systems for buildings, including, yes, data centers, which are all being built all over the place. Even if truck sales have slowed, the data centers on fire. These are backup power systems. Remember, data centers can't afford to go offline during a power outage.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.